What is going on? Back with another bootcamp video. This one's going to be about creating rules. And this is the most boring video, but the best video in the whole bootcamp. Dude, I just wish I could go back in time and someone could stress to me the importance of rules. Having rules makes you feel like a professional. Not having rules makes you feel like you literally don't know what you're doing. So there's two types of rules. There's psychological rules you should have, okay? And there is like technical rules, so based off the chart. So I'm going to be kind of going over both sets of rules, like my typical sets of rules and how you can create your own rules. And the one thing that people mistake is they think they should copy a professional trader's rules, but I've already explained this. Your brain does not work the same as everyone else's. You're going to create new rules. I think copying someone is a good start, but you're going to quickly realize that you're going to see some rules that don't make sense for you. And that's okay, because I did too. So psychological rules are things like how many trades a day, your max risk per account, and stuff like that. So I'm going to be going over those first. So I'm going to be basing this off of a challenger, funded challenge account. Okay. So starting off, my first psychological rule or my first rule is if I ever take more than 2 losses in a row, I am done. Okay. I ever take 2 losses in a row, I'm done. Okay. You do not want to take 2 losses in a row. That's going to make your mental really bad. So I am just done. All right. Simple as that. Now, I think that's the best rule because that's going to be the rule that's going to save you from blowing your account. Well, that and the next rule. The next rule is depending on your account size. Have a risk per account size. So I would start with 0.5% risk of account. Okay. These two rules alone will not allow you to blow up your account. Now, I will still get a DM saying, Dodgy, I blew up my account. And I'm going to be like, why? Why did you blow up your account? Well, Dodgy, I took a trade, I lost, and I sized up, and the next one lost, and now my account's gone. Well, did you risk 0.5% account? No, you didn't, because it's nearly impossible to blow up your account if you risk 0.5%. Okay, and people don't understand that. So more than 2 losses in a row equals down 0.5% risk of account. Now, what does this mean? This means for your account, you're probably going to be risking around 250 for a 50K account. Okay, which means what? Which means your max loss for that day, you cannot lose more than $500 in a day. It's physically impossible if you follow your rules, keyword if you follow your rules, to lose more than $500. And if you lose more than $500, you're dumb. You can't trade, and I don't know what to tell you. You need to punish yourself. You should be following these rules. These are a good start. So these are the two psychological rules that are really going to help boost your confidence and not allow you to blow accounts. Because the number one problem I see of good traders who know how to trade is them blowing their accounts because their ego is too big and they can't take a loss. So just follow these rules, please. Please, I am begging you, please just follow these rules. I don't want DMs saying I blew up my account. Why? Because you risked too much of your account and you revenge traded. That's why. Had nothing to do with the chart. Statistically speaking, if I had to guess, I don't know the stats for sure, but more than 90% of people, if I had to guess, blow up their account due to wrong sizing and revenge trading, not taking actual bad plays, because once you learn ICT, most of the plays you take are going to be pretty solid plays. So those are the two main rules. Now, a couple other rules I have is I never take the same setup you got stopped out of. And what I mean by this is you can't, as soon as you get stopped out, do not re-enter until it gives you another entry. Okay, so what I mean is this. There's an example today where we had let's see if I can find a good example. I think it was today. Let's say right here. So let's say you see this fair value gap and you're like, see, I don't want to go over too advanced because some of you guys won't understand this yet. all right, let's say right here. Let's say you see this fair value gap and you think, oh, we swept liquidity, we swept the high, and you think we're going to go down, right? And you take a stop, you do stop loss here, and this is your take profit. And the trade fails. What I mean by do not re-enter the same setup twice is as soon as it fails, do not re-enter as soon as you get stopped out. Like, don't just enter short position thinking, oh, this is just a random pump. We're going to go back down. That's going to cause you to lose. The only way you can get back in is if we get another entry, so another market structure shift, another fair value gap. And in this one, it just so happens we didn't get one. But like I said, you need another market structure shift, another fair value gap, and that's how you're going to re-enter. So the re-entry would ideally be here after getting stopped out here. Do not re-enter just randomly if you don't get another setup. And that's a major, major rule of mine. So that's another one. So other than those three rules, I think those are the best three rules that you should probably use. Now, there's going to be a couple other rules. Like a lot of people ask me, should I go for a certain take profit a day? Now, if you are trading a funded account, again, one of the things with a funded account is if you're withdrawing 2,000 or withdrawing 2,500, do not go above like 700, 800 a day because that breaks the rules. You can't make like $3,000 in one day on a funded account where you're only withdrawing like 2,000 because it's more than 30% of what you're withdrawing, and they have like a soft 30% rule where you can't make 30% of what you're withdrawing. Now you're probably wondering, why can I draw more than 2,000 then? Well, it just doesn't let you for the first 3 months. It does after the 3 months, but for the first 3, it does not let you. So, just do not have a take profit or, okay, I'm going to aim for $500 today, unless you meet that consistency rule, such as like 600, 700. The reason why is because if it's 4 p.m. and you haven't made, like, you've only made 300 instead of 500, chances are you're going to start forcing a setup, and that's going to be a big, big, big issue. You do not want to force setups. You're going to start doing it. I used to do the same thing, and that's the problem with trying to go for like a goal per day, because you're going to force really bad setups. So that's why I don't like that rule. Some people do. I don't think it's good. I think your rule should be take as many A+ setups as possible until you get 2 or 3 nice wins under your belt. Okay? Now that brings me to the next one. Day traders, max 3 trades a day. Scalpers, I would say max 5 trades a day. Okay? The more you trade, the more you're going to drain your mental capital and the worse trades you're going to make. Tomorrow is a day where we have no news, and I'm literally going in. I'm not even going in looking for a setup, honestly, because that's going to make me take the best setup. Now, this will help you as well. And make sure those are like quality trades. You always want to ask yourself, is it a good, like, you are running a business. You have to ask yourself, is it a good business decision? Right? It has to be a quality trade. It has to be something you learned. And I mean, it's so important. So those are the main psychological rules I would start with. And this isn't a lot, and you're going to want some more than this. Now, you're probably wondering, what are those more? Well, you're going to figure them out on your own based on how your brain works. But I think these are a good start. And some people might change these values. Some people might do 3 losses in a row if you're a scalper. Some people might do 1% risk of account. It depends on your brain and how you work. But this is just what I do, okay? Now, technical rules on the chart. My biggest one is I try not to short with equal highs above and equal lows below. So I've already taught you about equal lows and equal highs, so you should know what it is. And today was a good example. See how if we zoom in really, really close, we have these equal lows right here. There's 1, 2, 3, 4 equal lows. So what does that mean? Even if I see a market structure shift to the upside in a fair value gap, do not, and I repeat, do not take that fair value gap. 8 times out of 10, it's going to fail, and we're going to go to the equal lows. So you have to have good attention to detail for these equal lows. Do not long with equal lows below. You will get wrecked. Same thing with equal highs. Okay. Yesterday was a great example. Yesterday, we had equal highs right here. You had 1, 2, 3, and then I would count this as a fourth. Do not short this fair value gap. 9 times out of 10, you will get stopped out. Same thing with this fair value gap. See how the market just attracts right back to those equal highs? And these are 2 examples. You're going to see many more fails of this, which I can't show you. Now, you're going to see this work a few times too, and you're going to be like, oh my God, I wish I didn't listen to Dodgy. I'm telling you, trust me, do not short with equal highs above because the market's going to draw to these stop losses, and do not long with equal lows below because the market's also going to draw to these stop losses. That is my biggest technical rule. Okay. Now, my other technical rules are, unfortunately, won't make sense to you yet because you don't know the kill zones. But let me just give you a brief summary. So lunchtime session is going to be from, let's see, 12 o'clock p.m. right here to 1 o'clock p.m. right here. If we ever get really good or really like volatile or price action in the morning that expands nicely, such as this right here, this is nice, do not trade the lunchtime session. It will be trash. If we ever get bad or choppy, rangy price action in the mornings, which we really didn't today we did not, but let's say price was looked like more like this all morning. If we ever see this, then you can trade lunchtime and expect lunchtime price action to be decent. Okay, so remember, 12 to 1 o'clock is lunchtime. If we ever get bad price action or choppy price action in the morning, it is okay to trade lunch. If we ever get pretty expansion, like a lot of expansion in the morning, do not trade lunch. That's my other hard rule. And also, bad price action in the morning equals better price action in the afternoon. So the afternoon session is 1:30 Eastern Time, New York time, to 4 p.m. Eastern Time. Make sure you're all in New York time at the bottom here. Okay, UTC, right now it's -4, but it will go back up to -5 back in the fall, okay, because it's for daylight savings. But you should always be in New York time. So you might have to replay what I just said, but I'm not going to repeat it, all right? And those are the biggest technical rules I have according to the chart. Now, there's a few other ones that are more advanced that you don't need yet. And as you learn ICT, you're going to figure them out. One more is do not short with a trend line above, like this. All the retail traders are shorting there. You do not want to copy them because they're all putting their stop losses above this trend line because they read in the trading books that we're going to reject this trend line. Nope. Do not short with a trend line above. Why do you think these fair value gaps fail? Why do you think we don't reject these fair value gaps and go down? It's because there's a trend line above and people have their stop losses there. Therefore, the market's going to target them and stop everyone out. Okay? How many times do I have to repeat this? A lot, because you need to understand and look at the market in terms of where stop losses are. And I know that if this fair value gap right here is below a trend line, likely we're going to break this fair value gap and go break the trend line because that's where everyone's stop loss is. So those are my main rules I have. You should create your own rules. You're going to figure out your own rules after this video. I didn't figure out my own rules probably a year or two in the trading. I needed so much time to figure out my own rules because I needed to see what worked and what didn't. And the equal highs thing and equal lows thing, I figured out very, very quickly. So that's going to be it for this video. I will see you guys later. Peace.